Welcome back. It's a pleasure for me to be back here with our last panel of the day for the West Africa FinTech Ecosystem Meeting Singapore FinTech Festival. So this morning, a little bit earlier, we had our first panel on FinTech innovation and SME finance. And that panel was, we opened up the panel with a high-level speech from the Central Bank of Gambia. My thanks again to Dr. Sipu Jabi for his opening remarks. And then we had my colleagues, Ariana, take the panel through. And I've heard a couple of things that I thought I'd bring it here. From Ilda, from Pizesha, saying that FinTech being the hope of SMEs today, and from Sidi, the strength of humanity rallying to create solutions for the unbanked and for those that don't have a voice today in that ecosystem. And I've also heard from Nasir saying how important it is for us to develop this ecosystem. And today, in this last panel, we want to tackle, yes, the ecosystem needs to be built up. Yes, we need these innovations. And yes, we can promote access, universal access to financial services. But we want to make sure that as we are doing that, we keep customer protection as a key component of our intervention, that the regulatory environment is also incentivizing all of us in this ecosystem to be responsible in what we are proposing to protect the consumer. The one that is unbanked is even the one that deserves more protection, and that the stability of the financial system is maintained and even strengthened as we go through this era of digital economies and more digitalization. So it is an honor for me to have partners on this panel with us, representation from the World Bank, from the Central Bank of Gambia, from the Africa Cybersecurity Resource Center, and also we will have closing remarks from the Central Bank of Sierra Leone. So allow me to introduce our panelists before we start the discussion. And knowing that this panel, we will have presentation from each of the panelists first, and then we will go to the discussion. So allow me to welcome and Mahesh Uttam Chandani from the World Bank, and also Mrs. Aisha Fai from the Central Bank of Gambia, and Jean-Louis Perrier from the Africa Cybersecurity Resource Center. And last but not least, Mr. Sheikh Cisse from the Central Bank of Gambia. Welcome to you all. And it is a panel focused on customer protection, focused on cybersecurity and what we could do as member of this ecosystem, from a development agency perspective to a regulator's perspective to the private sector's perspective, and how together we can address these questions. So Mahesh, would you like to start?
Thanks very much, Sabine. First of all, I'm grateful to you for the invitation to be here, and it's a pleasure to be here. Let me share with you first the results of some very recent survey data that we're really excited about. So at the World Bank, we joined forces with the Cambridge Center for Alternative Finance to conduct a survey of 114 jurisdictions between June and August of this year to see how regulators were responding to the COVID-19 pandemic in the context of FinTech. And the results of the survey are interesting for, I think, what we want to discuss in this panel here today, because respondents shared with us the top 3 risks they believe to have increased in the FinTech space due to COVID-19. And as you'll see here, 78% of respondents highlighted cybersecurity amongst their top 3 increasing risks, followed by operational risks at 54%, consumer protection at 27%, and frauds and scams at 18%. So I think this, tells us empirically that what you were saying in your introductory remarks is really critical as we continue to pursue a growth in financial inclusion, particularly through digital channels, and the importance of doing that while we are maintaining concerns about consumer protection and cybersecurity. Now, while COVID-19 may have magnified regulatory attention on certain risks, many regulators are going out of their way to stress to us that cybersecurity and fraud risks are not inherently novel or unique to issues relating to COVID-19. And in that respect, it's interesting to note that cybersecurity risks are really in some ways expected to be the so-called new normal in increasingly digitized economies beyond the realm of financial services. And there was one regulator in the Europe and Central Asia region who said to us, and I think I can quote them, that cybersecurity is always a concern, but it is not just a fintech problem. And so we are seeing that risks identified by regulators may naturally be driven by their regulatory remit as well, with not all regulators having responsibility for issues like financial stability or consumer protection or market integrity. And a number of respondents identified some COVID-specific risks related to fintech, such as data privacy concerns, concentration risks, decreased liquidity amongst digital capital raising providers, that also raised some concerns in our minds. And if we look at how advanced economies are responding to these risks and the measures they're taking, you'll see here on this slide some of the specific areas that the respondents to our survey have reacted with. And then you'll also see here some very concrete and specific regulatory innovation initiatives in a variety of areas, including, of course, in the space of RegTech and cybersecurity. Now, focusing a little more specifically on cybersecurity, many regulators perceive that the digitization of financial services is going to increase with new or exacerbate existing cybersecurity risks. Indeed, during the pandemic, fintech firms have, on average, experienced a 15% increase in cybersecurity breaches. And so it's not surprising that close to 30% of the regulators that we surveyed have taken measures with respect to cybersecurity in light of COVID-19. And this figure is broadly consistent across all the income groups, both in advanced economies and emerging markets. And some of the specific measures they cited included enhancing the requirements or controls, such as the information security controls that fintechs are required to comply with, and enhancing cybersecurity protocols that are encouraging providers to conduct cybersecurity risk assessments. So this is some of the concrete changes that our survey is telling us we're seeing. But I think if we take a step back for a second and think more broadly about how fintech is really advancing the cause of financial inclusion, we're seeing that fintech is increasingly a key enabler across the financial sector, again, both in advanced economies and emerging markets. And in 2018, you may know that the World Bank and the International Monetary Fund jointly launched the Bali FinTech Agenda, which helps us, provide a framework for us to work with governments to help policymakers address the challenge of increased fintech in the financial sector. And as you alluded to in your opening remarks, they're critical challenges for policymakers to harness the benefits and opportunities of fintech while managing its inherent risks. So to think about some of those risks more broadly, these risks are going to include not only the technology that supports and enables fintech offerings, but also the new business models and product features and provider types that we're seeing that, again, are bringing more people to the financial sector, but are creating some challenges. So, for example, the rapid expansion of peer-to-peer lending that we saw in China in the first half of the decade was followed by some significant, and well-known platform collapses and incidents of fraud and operator misconduct that caused significant losses to consumers. We also know that digital microcredit has expanded across a lot of emerging markets, and we've seen this in countries like Tanzania and Kenya, where there have been large numbers of borrowers not able to repay their loans. There is, a significant uptake in electronic money in developing economies, and that rise in usage has been accompanied by a rise in a variety of risks for consumers, including the potential loss of funds due to fraud or unscrupulous fee charging. And so again, coming back to the COVID pandemic, and what we're seeing is an increased migration to digital financial services by consumers and providers. It's showing us that DFS brings significant benefits, right? Contactless transactions, low-cost, wide-scale rollout. But, again, we're getting reports from countries that individual lenders and investors are being adversely affected by risky loans offered through peer-to-peer lending platforms, and borrowers that have obtained such loans are now actually struggling to restructure them. And a number of low-income consumers are facing increased difficulty in repaying their existing debts due to the pandemic. And we know this pandemic has not affected all people equally and is in fact exacerbating inequality. And there are some instances where DFS can be an accelerant in some ways of this inequality. So I think some key risks and mitigants in terms of thinking about how to respond to this challenge to me are, first, the factors such as the opaqueness and the novelty of some of the fintech business models, right? If we think about platform operators' roles and the lack of consumer familiarity and understanding with new offerings, these can lead to heightened risks of fraud or misconduct by fintech providers or third parties. And platform finance poses risks to consumers as both, borrowers, but also as lenders and investors themselves through these platforms. Also, I think we need to think about certain characteristics of fintech business models that can lead to conflicts of interest between consumers and fintech providers. So some revenue models that are heavily dependent on fees generated by new business can give rise to perverse incentives for fintech providers to act in a manner that's not consistent with the interests of their consumers, such as, again, where you see these lending platforms or digital microcredit providers focusing on loan quantity over loan quality to maximize fee-related returns. And these risks can be exacerbated in markets where fintech operators are attempting to grow their revenue and size rather quickly. Another area of concern to be mindful of is consumers may face heightened risk of adverse impacts due to the unreliability or vulnerability of platform technology. And again, this is where cybersecurity plays a huge role. Consumers acquiring products through fintech platforms may be more vulnerable to cyber fraud than when accessing sort of traditional financial products through, brick and mortar channels, because platform malfunctions can actually have adverse impacts on consumers, ranging from sort of data integrity to just straight out and out poor service. And these can, again, be exacerbated when you're relying on automated processing of transactions. And then we need to think about, particularly during the economic downturn that is accompanying the COVID health crisis, that there could be a greater risk of business failure or insolvency of fintech providers or fintech operators due to operator inexperience, untested businesses, the kind of natural culling in the market that happens during an economic downturn. These market factors that will affect long-term viability can bring serious consequences to some of these providers. And so this can lead to consumers whose funds are held or administered by a fintech provider facing a higher risk or loss of funds if the provider's business ceases to operate. And consumers who may not be particularly sophisticated may assume they are dealing with, a regulated or insured under deposit insurance schemes financial provider, when in fact they're dealing with an ordinary private business. And I think that poses, again, very specific challenges. And business models for fintech, as we know, often revolve around the innovative use of big data and alternative data as tools about whether to target specific consumers for product offerings, or how to assess, creditworthiness, or how to design products. And the speed and the nature of this digital interaction with fintech providers and the complexity of the data and collection use can really amplify data privacy related risks for consumers. But also the use of algorithms for consumer-related decisions is becoming, I think, particularly relevant in highly automated and low-cost fintech business models, which again, because of their cost structure, are precisely the ones that might enhance financial inclusion. And I think consumers may face a range of risks as a result, such as decisions that might be based on discriminatory or biased outcomes. And in many cases, these algorithms are just a black box, and they're very hard to assess from the outside. And again, I think we need to be vigilant from a regulatory standpoint about how to respond to those. So you know, apologies if I've just laid out a string of problems and challenges, but I hope it helps us frame the discussion around where I think we need to be focused, as you rightly said, as we enhance financial inclusion, that while bringing financial services to the most vulnerable populations, which have historically been excluded, that we don't exacerbate their challenges. Back to you, Sydney.
Thank you very much, Mahesh, for going all around the question and sharing with us all these different points of attention as we are seeing these innovation with the objective of advocating and enabling universal financial access for the most vulnerable. I appreciate really that you went through the different risks, whether they're platform risks, whether they're customer protection, whether they are the ecosystem itself. And as we look at all of these risks, I think it puts the regulators in a very, very interesting position. So it's a question of saying, we want to fast track financial inclusion. We want to enable an ecosystem and a regulatory environment that incubate these solutions so that, we're able to play that, acceleration of financial inclusion. Yet at the same time, we have a responsibility and a duty to make sure that the most vulnerable, the unbanked, the one that don't have a voice, can be protected, because at the end of the day, trust in the system is really what drives the adoption curve of all of these innovative solutions that are coming into the market. And thank you very much for going around all of this risk and all of the responsibilities that we have as development agencies and then regulators and the entire ecosystem around these questions. And I feel like this is a great segue for Aisha to dive in and share with us the position of the Central Bank of Gambia on these questions. Aisha, to you.
Yeah, thank you very much, Sabine, for that. Thank you very much, Mahesh, for that wonderful presentation. Good afternoon, all the way from the Gambia. My name is Aisha Fai, and I'll be touching a bit more on the journey. Mine will mainly be focused on the Gambia. Which is going to be just to explain where we are at the moment, because we are a little bit new to all this. So I would like to bring up some of our journey in digitizing the Gambian economy. Just a few decades back, the Gambian government did undertake a number of initiatives to implement systems to start the digitization of our system, of our economy. Basically, we introduced the IFMIS, which was we introduced the ACE cable, where it was done to increase the internet bandwidth, the speed of internet, and it actually brought internet to most households. Then the ECO1 project came to further upgrade the infrastructure that the ACE was riding on. And we also introduced the creation of the National MOICI, which is the NICI, National Information and Communication Infrastructure Policy, with a mission statement to achieve higher growth rates in all spheres of socioeconomic ICT innovation. So government was very much behind IT innovation per se. So under the NICI policy, there were a lot of number of development plans that were highlighted. Through that, we implemented a number of systems, which was one of them was the IFMIS, which is used in the Ministry of Finance, the Gambia National Agriculture Database that was used for agriculture, labor management information systems. So these are basically systems that came about due to the action plans that were identified under the NICI policy. This brings us, this is just to set the background to show that we are now using a number of IT systems, which was just introduced just a few decades back. In order to support these IT systems, with obviously digitization comes the risk of cybersecurity, which is completely quite new in my area of the world. I believe the government have been spoken to by IT experts and almost convinced, because it is always difficult to raise these concerns to government officials, because if they don't see the actual problem right now, it's always difficult to say invest before you're attacked. So anyway, we went on a journey where the Gambia government did implement a number of initiatives to address cybersecurity challenges. And one of the best ones that we did was the enactment of the Information and Communication Act in 2009, which actually allowed us to have an act behind information technology to state that it was a viable mode of communication and storing of data. Then you had with the regional initiatives that happened with the ECOWAS directive on fighting cybercrime, where Gambia was actively participating in, which was adopted in 2011. The African Union Convention on Cybersecurity and Personal Data Protection. Whilst we don't have the Data Protection Act implemented in the Gambia, we sort of shadow under this African Union Convention. And I believe it is currently in the making because it's very important when you have a digital economy. The MOIC also drafted the Gambia National Cybersecurity Strategy. This is yet to be adopted, but it is a very, very thorough strategy, which once implemented would really see cybersecurity as one of the prime focuses in here. And then you have the Ministry of Justice, which drafted the Cybercrime Bill, which was finalized in 2019, and it is currently open for consultation till January. Well, it was supposed to be January 2020, but it has been delayed due to COVID. So I believe it will extend to January 2021. I took a case study on effectiveness of cybersecurity laws in Africa. We do have the laws in the books. Some of them have passed through Parliament. Nigeria had the Cybercrimes Act 2015 in May 2015. The Gambia had the Information and Communications Act in 2019. But are they effective? How effectively are they tackling cybersecurity issues? And basically the answer is they are not. We have the laws written in the books. It's quite difficult to implement them in our current legal systems. And basically we do need to do a little bit more to ensure that these laws are enacted. People, are adapted in the courts as well. We need to have the lawyers trained to understand them and how best to implement them, and even how to utilize them as well. So the survey shows here that 65% said that basically we're not ready. These laws are not being effective as we speak. Current cybersecurity challenges in the Gambian financial sector. Currently, we have limited fintechs. We do have fintechs, but we haven't fully adopted mobile money per se. We're still writing our national financial inclusion strategy. We do have a very good target of ensuring we're 70% financially included by 2021. That is quite a big, hopefully we can achieve that. But I think cybersecurity challenges will have to be addressed alongside with those. So we have lack of proper investment in financial sector to eliminate cyber crimes, basically our IT infrastructure, even within our own backbone of our financial system is quite old and needs to be upgraded. Lack of proper monitoring tools, because you need to be able to monitor the systems. We went to other countries on study tours and saw that they had a whole unit for IT cybersecurity monitoring various aspects of their system. So that needs to happen. We have limited skills and expertise in cybersecurity. We don't have any training centers currently in the country that particularly address cybersecurity. We don't have it in our university as one of the courses, and all those need to be done. Limited expertise in cybercrimes, legal enforcement. Again, with a cyber criminal, have we ever prosecuted anyone who has done any cyber crimes? No, that hasn't happened. Lack of funding to set up proper cybersecurity training centers in the country. It would be very important to make it as part of our syllabus in university, in colleges, so that people we will develop more expertise in the area. Continuation of cybersecurity challenges. The lack of adequate funding to address cybersecurity related risks within the financial sector. Even within the banking industry, sometimes when risks are highlighted, the funds it requires to address these risks are just quite high. And sometimes they just would rather work on mitigating the risk rather than addressing the root cause. And that is usually due to lack of funding. Lack of funding to organize national cybersecurity awareness. I think people will need to be awareness needs to be raised. People need to be educated. There has to be an improved customer literacy if we are going to win this war on cybersecurity. Lack of proper regulatory framework. We don't have the regulatory framework to be making cybersecurity as part of our routine examinations. We need to invest more on that area. Lack of national cybersecurity task force to effectively investigate. We don't have a national cybersecurity task force who, when a bank is compromised, we don't have one central task force who can be contacted to investigate, to overlook, to create a response team where where we can address the issue. So all these things need to be addressed. That takes me to consumer protection. Consumer protection in the Gambia is being overseen by the Gambia Competition and Consumer Protection Commission. They're mandated by the Consumer Protection Act, which was created in 2014 to protect consumers from unfair and misleading market conduct, and establishment of consumer tribunals to address all consumer complaints and connected matters. So the GCCPC is actually responsible for addressing consumer-related issues. From the GCCPC, they have a complaints procedure. If the complaints comes through, it goes through the Consumer Protection Officer, who will hold an inquiry, contact both parties informally first and speak to them, see if they can make a headway. If they don't get anything done, they will go to the alternative dispute resolution. And then if that doesn't work, it will go straight to the tribunal. You can see that these work in traditional commercial buying, selling, but it doesn't work in digital services. These complaints procedure will almost be redundant when financial inclusion takes effect. So I think this was just meant to highlight the fact that there's a big gap at the moment with what we have and where we're aiming to get to. So the complaints can either be submitted to the Commission directly or to the tribunal. GCCPC Consumer Complaints Database, these are the number of complaints that come through. The graph shows it quite nicely. You can see that complaints were not as high up to the end of 2019, but in 2020, from the fourth quarter onwards, it did shoot up. This was mainly because of they had a campaign to sensitize people on how best to make complaints and explain even about the act, because most people did not even know that act existed. They didn't know their rights to complain about products that they buy. So they just had to raise visibility and sensitize the public generally. Challenges in the Consumer Protection Act, protection in the Gambia. Generally, this is a area that needs investment, proper investment. When I spoke to them and interviewed them prior to this meeting, they did tell me we will need proper investment in this area to be able to combat any digital financial services related complaints. Consumer protection not effectively implemented, as most people do not even know about the act. Lack of proper public sensitization on reporting channels on how best to address consumer complaints. Poor literacy levels in the Gambia limits people understanding products and services in the first place. Consumer Protection Act not updated to address digital financial services. So they don't have any mechanism in addressing any sort of digital financial services. Even the current banking industry, they don't really venture too much into. Lack of proper legal expertise or framework to effectively address disputes on digital financial services in a timely manner. Lack of adequate monitoring tools. They would really need to have the tools to be able to even monitor if there are any issues and to be able to resolve them, investigate. Lack of expertise at GCCPC. The Commission itself don't have the expertise to monitor the variety of digital products in the market in order to safeguard customer rights. Lack of expertise to devise technology-led solutions. So when we had the meeting, I spoke to them about ensuring that there are technology-led solutions where the technology itself will have the ability to penalize people if let's say they're supposed to if certain conditions are not met. So these are things that can be done at technology level rather than having to come back to them and then resolve these issues. If a customer service is not paid for in 24 hours, the funds should be returned back to the consumer rather than being kept. So all those stuff are things that they need expertise on, proper technological experts who will understand and be able to implement. So basically, I just want to come up, explain the landscape here in the Gambia. When we're trying to fight cybersecurity, we do it holistically. The world is now completely, we're in a global village. All IT systems integrate these days. We have integrated platforms here in the Gambia, and our payment systems will now be integrating through PAPS, the payment and settlement systems. We will need to be integrating with other WAMS member countries, including Sierra Leone, Ghana, Nigeria, so that we can to take effect of this ECHO, the single currency initiative. So all these means that we all equally need to be in the fight against cyber crimes. So the fight against cyber crimes and cyber terrorism can only be effective by helping countries with emerging cybersecurity strategies to develop suitable legislation, strengthen education opportunities, and implement adequate IT infrastructure with effective monitoring tools to tackle cyber threats. This can only be achieved by the provision of cybersecurity education funding for emerging economies. I believe that would be where I would want to emphasize my talk on. I believe there has to be adequate funding to look at the cybersecurity loopholes in emerging economies so that we can ensure that our systems are not compromised. Thank you very much.
Thank you very much, Aisha. Really appreciated you taking the time to share with us the whole development of the ecosystem and what the central bank is doing in Gambia, and also where the needs are, whether it is on capacity building and more investment. And I'm happy to say that for us at UNCDF, it's a great opportunity to work with the Central Bank of Gambia through the Job Skills and Finance program we are implementing in Gambia with the support of the European Union. Part of that is us being available and facilitating this best practice sharing between the different regulator and really helping build our ecosystem from lessons learned from other countries and other regulators who have faced or have implemented innovative solutions, so that the Central Bank of Gambia, as you're building this ecosystem and you're building this framework for customer protection, you can, you don't have to start from scratch. You can build on, best practices and global standards. And likewise,
exactly.
I think the World Bank has supported most of the countries in the region and continue supporting on that framework. So please, I feel like we are privileged to have both development agency and the regulator here. And I have to ask myself, what is it that the private sector can do on these questions of, safeguarding customers while we're going towards innovative solutions? And I'm really happy to have you here with us, Jean-Louis, so present your initiative on the Africa Cybersecurity Resource Center and help us understand what you are doing and how the private sector can also invest into securing this platform and ensuring that the innovative solutions that we're bringing up to the market are indeed looking at responsible and global standards in protecting customers and protecting platforms. To you, Jean-Louis. Jean-Louis, we can hear you. You're on mute. Jean-Louis, you might want to unmute yourself so we can hear you. We definitely see your presentation and would love to hear your comments on it.
I'm sorry.
That's all right. To you, Jean-Louis.
Yeah, so thank you so much, Sabine, and also thank you very much to the former presentation, Mahesh and Isha, that have, I think, drawn a picture that is very revealing. But unfortunately, I have to say that Gambia is not the only country in Africa which is in this state at starting a process. But in the meantime, we will see that it offers opportunities to not to make all the mistakes we have done in Europe or in the US in cybersecurity, and maybe act more smartly. So I am Jean-Louis Perrier. I am the co-founder of Suricate Solutions. It is a company that is dedicated to cybersecurity in emerging countries and specifically in Africa. We have created the first cybersecurity operation center in Senegal, which is dedicated for financial inclusion since last 5 years. So we have acquired a number of lessons. When we have discussed with a number of central banks, of FSP, of fintechs throughout the continent, we made a diagnostic that was not very far from the one from the Bank of Gambia. So we have designed a project which is quite ambitious, and I have to say unique on the African continent. We'll come to see it later. It is based on experiences that have been proven in other continents and that have worked. So there are no reasons it would not work in Africa. And the idea is to provide all support and services to the financial sector in general, and in particular all the FSPs, the microfinance, and also the central banks who are themselves part, of course, of the financial system, and they have also their own system to protect against hackers, as we have seen in the last 4 or 5 years, starting with the Bank of Bangladesh. Central banks have very valuable infrastructure for the hackers. So this project is called the Africa Cybersecurity Resource Center for Financial Inclusion. Let's move on. So I have to go to the next slide. This, let me restart the sharing.
Jean-Louis?
Yes.
Okay.
Okay. So I will not go in all the details that Mahesh has very well explained about the risk for the consumers of financial inclusion. We hardly separate the consumer and the FSPs. In terms of cybersecurity, if you enter in a consumer place, you will have chances to go in the fintech, and vice versa. If you get into a fintech, you may be stealing money for 100,000 or 1 million customers. So in the review, the study from the World Bank, we have noted that an Asia-Pacific regulator said on systemic risk, a targeted cyber attack or some other form of external threat on a major fintech company has the potential to disable large part of the economy without notice. We could add, of course, that it may also impact seriously savings and lives of 100,000 of customers. So I think it is a good news that this perception now has come to the mind of regulators, but also on all the stakeholders of financial inclusion, or more and more stakeholders, I should say more precisely. It is clear also that the recent development of digital financial services is considerably increasing the risk. And as we have seen in the case for Bank of Gambia, it is not the IDs that are missing. The diagnostic that was made was quite comprehensive. What is missing is guidance and financial and very importantly, human resources to go through these changes. If we talk at the African continent level, the users of FSP or DFSPs that have an account is something like 250 million people, which is growing very fast, as you know. And it is more than 2,000 or 3,000 financial institutions throughout the continent. I'm just focusing on sub-Saharan Africa now. One point is also, it is difficult to raise funds when you don't have data to explain the business case to the donors. In Africa overall, there is a very limited number of research that is done on cybersecurity compared to other continents, Asia, America, or Europe. We have also trends of reinforcement of cybersecurity and customer protection regulations. And we have also a large number of stakeholders, be it FSP, digital FSP, the customer regulators, universities, the countries, law enforcement, as the Bank of Gambia said. The investors also are more and more concerned about issues of cybersecurity, and all regional and global or multilateral organizations like the African Development Bank, like the World Bank, the IMF, and so on. So we are considering that really we have to leapfrog the capacity of cybersecurity in Africa for the financial sector and create an ecosystem in cybersecurity which is parallel or which is securing the DFS ecosystem. And this should enable to effectively implement new security regulations, because it is one thing to decide a regulation, but it is a very tougher thing to have this regulation implemented effectively by the FSPs. Improve cyber resilience, secure the development of digital financial services and financial inclusion, and of course, protect customers. So we have designed a kind of practical solution to improve the protection of both customers and FSPs. The objectives of the Africa Cybersecurity Resource Center is to build and mobilize a comprehensive, cost-effective, scalable, and sustainable cyber resilience regional and sectorial ecosystem for FSP and policymakers. So I think all words in this sentence are important and imply different consequences or design rules. Cost effective, as said, the Bank of Gambia, having ID is something, but being able to finance them may be much different, of course. Scalability, Africa is very big, and it would be absolutely unrealistic to say that, okay, in all the 54 countries, we will have a full cybersecurity resource center. In terms of business plan, it just does not fly. So we have to balance the regional and the more local approach, and to make sure that the progress will be progressive in time, and that we grow in experience and grow in resources and grow in skills. To make this, it is important to build what is called in the cybersecurity vocabulary an information sharing and analysis center, or ISAC. And this enables to gather information on threats, on incidents, on best practices from the peers, the financial sector, create some reporting, explain the trends, and all of this will allow to improve prevention and detection. The second thing is this information sharing should be connected with international intelligence network, because a new threat that happens in Malaysia today or in Singapore may be very well in Nigeria tomorrow, or in the other countries, and vice versa. Something which is new in Zimbabwe may be of interest to Singapore tomorrow. We have already acquired an initial funding from the African Development Bank. That means we are starting to turn dreams into reality. One of the main challenges is to get the stakeholders' engagement. We have seen that they are quite numerous. Some are international, some are regional, some are local. So it is important to have all these entities start working together, or coordinate better would be more appropriate. So we have created a public-private consortium. It is a not-for-profit organization, and it gathers about 350 world-class experts in cybersecurity from Luxembourg and also from Africa. And we have a very strong focus on implementation, because we are strongly believing that regulation only will not solve the problem of cybersecurity on the continent. So within our consortium, we have the Luxembourg University Cybersecurity Research Center, a security agency of the state, and two private companies, one which is one of the leading group in Europe, which is Excellium Group, and Suricate Solutions, as we said, with our first experience, which is 5 years experience in Senegal and West African Monetary Union, and more recently also in Central Africa. Let me. So we need to build efficient setup and efficient operations. And this is enabled by mutualization. To be smarter than organization in Europe or in the US, we must go straight to the point that they have reached now. Mutualization ensures sustainability, allows to optimize quite scarce resources, and also improve inclusivity. It means that we will not leave one country or one FSP behind. So the idea is to build an organization with two levels, one regional level for the whole continent, plus sub-regional organization, more sub-regional rather than country. Once there is enough activity to be sustainable, then we can scale up locally when it is relevant. One very important point is to deliver quality and affordable services, because financial inclusion does not have the same financial resources as large international banks, for example. We also have to reuse and adapt what is available internationally. We have to really understand that in Africa, or in financial inclusion in particular, the requirements are exactly similar. It is only that we have less resources to implement these requirements or solutions. And of course, in some countries, there may be local initiatives like a country computer emergency response team. There could be also local regulation, and all the stuff we are building should ensure that the FSP will absolutely be compliant to the local regulation. Human capital development is very critical to create tomorrow's capacities instead of permuting the existing ones, as we see a lot in the financial sector. One bank is hiring resources from a telco and vice versa, but they don't build new resources. So in our side, we have decided to hire, train and coach more than 100 experts in our 3 locations in the 5 years of the project. We have a very strong workforce development program, which includes welcoming PhD trainers in our cybersecurity laboratories, students in our cybersecurity laboratories. And then this PhD will be professors in Master of Science that are almost non-existing throughout the continent. There are only a few, some in Nigeria, one in Kenya, but it is a very limited number compared to the needs. Just to give you one figure, we have about 10,000 cybersecurity experts in Africa, while there are 700,000 in the US, plus 300,000 open positions.
Wow.
Also, women.
Quite staggering.
Yeah. So we have to go fast. Women also have a huge potential in cybersecurity, not only because they are women, but also because they have different, sometimes or quite frequently, a different perspective on risk than may have men. And in cybersecurity, there is a great number of different roles or positions. So there is indeed a lot of work for ladies. In our project, we have also a huge capacity building effort. And once you have the capacity, you also have to make sure that they stay on the continent and they don't head to Silicon Valley or London or whatever. So for this, you have to create career paths for them. Well, there is a lot of work on retention of the skills. Last, we need also to integrate R&D and innovation. First, to understand future threats and prepare responses, which can go until creating startups that will provide cybersecurity products and services. Africa has been a leader in digital financial services, but there are really a limited number of players in cybersecurity. So we really think that there is also a good opportunity for growing the number of jobs and skills. And then the program, we are focused on Africa, but everything we do is documented, which will allow to reuse in other regions or continents if necessary. And I am sure there is a requirements, but well, we cannot do everything together.
Thank you very much.
To wrap up, we need a different component and a specific organization to create a consistent and open ecosystem. This ecosystem will address regulators and supervisors, obviously, as well as FSP and financial inclusion. There is one part which is a kind of public good organization, which is at the regional level, which is not for profit, as I said, which is centered on the information sharing, because if you are only within one country, it makes very little sense to share this information within the country, because you will not have a mutualization of the protection. So the information sharing organization should really be at the continent level and interconnected to other similar organization on other geography. We plan to cover West and East Africa in the first start. After, of course, North Africa or Austral Africa can be covered. We need to build partnerships in R&D. We have our own capacity in R&D, but it is also necessary to onboard other researcher, other university to have the maximum impact. It is the same in capacity building. There are already, and there will be more capacity building initiatives. So we have to coordinate our own initiatives that is quite comprehensive to the other initiatives. And we also aim to contribute to the development of a proximity network of reference commercial partners. Reference, I mean, with high quality. There is a number of cybersecurity players in Africa that are not necessarily very skilled or reliable. So we need to establish a benchmark on which the market will compete. So this more commercial or private part will manage incident response, as Isha said, security supervision, also and all the other commercial services. And we use open source software to make sure that the replication or the cloning of this organization can be made at the lowest possible cost.
Thank you. Thank you very much, Jean-Louis, for sharing with us this great initiative, and really a segue for me to ask Mahesh for a closing point in terms of, what is that balance from that ecosystem to encourage innovation for solutions that are going to help us fast track and reach these goals of universal access to financial services and fast track financial inclusion, meet the sustainable development goals, and yet, the responsibility to protect the consumer, to protect the trust in the system, the faith of these consumers, their voice that we can hear every day. So what is the recommendation or call to action, if I could say, on this question? Mahesh, to you.
Thanks very much, Sabine. Well, first of all, I think there's no question that fintech is the answer in terms of scaling low-cost services to increase financial inclusion. And I think there's no value in sort of fighting against that or denying that. I think what we must do, and what I'm so glad the other panelists have highlighted, both from a regulator's perspective and from a development partner perspective, is we need to work with regulators to strengthen their capacity to test and learn models and help them test and learn models that expand their regulatory ability over some of these fintech providers. And I think there are different models that can be used, but ultimately it's going to fall to regulators to address this challenge and to make sure that they can understand both the opportunities and risks that some of these fintech tools bring. Thanks very much, Sabine.
Thank you very much, Mahesh. And actually, speaking of regulators, I think this is a great segue for us to go to Sierra Leone and Bank of Sierra Leone for interventions on the closing remarks. Mr. Sheikh Cisse, can you hear us?
Thank you very much, Sabine, and thank you all the participants. Let me take this opportunity to thank the UNCDF and the Singapore FinTech Festival for inviting me to give the closing remarks at this festival, Inclusive FinTech Innovations to fast-track financial inclusion and the role of the regulators. Please allow me, to give a bit of background on the FinTech, innovation itself before moving to the role of the regulator. Data has revealed the great power of innovative technologies to expand access to financial services, and most importantly, ensure that people actually use these services to improve their lives. And FinTech presents, amazing opportunities to empower the unbanked to protect themselves against hardships and also invest in their futures. FinTech has the potential to deliver benefits to financial inclusion and gender equality through multiple channels. One of those channels, include mobile money as a gateway to FinTech innovations, as it provides a platform for basic savings and payments services, and the ability to use local agents, access points, offer potential to provide greater access to financial services for a wider population. This brings benefits to previously unbanked and underserved populations and regions, and improves the safety and timeliness and reduces the cost of payment systems. The impact of mobile phones and other electronic delivery mechanisms on the availability of financial services to individuals, households, and micro and small enterprises is the most advanced and widespread contribution of FinTech to financial inclusion. Mobile money accounts have spread geographically to many other countries in West Africa and beyond. and are spreading to the provision of other types of financial products and services, such as credit, insurance, and investment in government bonds and other securities. Distinguished participants, these experiences demonstrate how FinTech can help emerging economies to increase financial inclusion without going through traditional financial service providers. FinTech can also drive more competition and collaboration between traditional players, startups, and tech companies. However, technology is a double-edged sword. Innovations can sometimes amplify threats to consumers, for example, large-scale frauds and data privacy risks, undermine the business model viability of some incumbents, increase technology risk, cybersecurity risk, and other operational resilience risk, lead to an increasing reliance on third-party suppliers, and there may be a lack of board and senior management understanding in both financial institutions and regulatory authorities of some aspects of FinTech, in particular around the use of artificial intelligence and machine learning. So these are some of the issues that the previous speakers have actually highlighted here this afternoon. Some of the risks of FinTech may be even higher in emerging economies where supervisory and regulatory capacity is low and legal frameworks are weak. These new risks, speed, and complexity of FinTech can trigger regulatory overreactions that can stifle innovations. At the same time, if these risks are left unaddressed, they can harm customers and threaten financial stability. Technology and innovation can also leave behind unconnected and less digital literate customers. For regulators in emerging and developing economies, creating the regulatory tools to keep up with the fast pace of innovation is extremely challenging, particularly in countries that lack resources and staff with the technology skills to understand FinTech's rapid development. Again, these issues that have already been highlighted. Regulator. Regulatory interest in the use of FinTech innovations by financial institutions. So line themes are already familiar from earlier supervisory initiatives on outsourcing, cybersecurity, and risk management. But regulatory concerns and responses are beginning to extend further. Regulators and supervisors have begun to introduce regulatory requirements and supervisory expectations relating to various aspects of FinTech, including regulatory perimeter. Many countries have revisited or are revisiting the regulatory perimeter to clarify and extend the regulatory perimeter to cover at least some new and previously unregulated types of financial instruments or financial activity. For example, crypto assets and financial instruments that reference crypto assets, and crowdfunding and peer-to-peer lending. This in turn has implications for the authorization of licensing of new FinTech-based financial institutions, and for the need for these firms and platforms to meet the minimum authorization criteria for senior managers, systems and controls, resource and ownership. Sandboxes. Some regulators are using sandboxes to test FinTech applications to identify and address risks in a constrained environment under the watchful eye of the regulator, and to act as a first point of contact for companies that are unsure about the applicability of regulations. Regulators are focusing increasingly on how financial institutions identify, monitor, and manage the risks to them arising from FinTech, including strategic, operational, compliance, cybersecurity, and outsourcing risks. Regulators are assessing how well the boards and senior management of financial institutions understand fintech applications and the risks arising from them, how well they embed fintech opportunities in their strategic and business planning, how they operate new product approval process, how they manage operational and outsourcing risks, how they monitor and review the impact of fintech on their compliance and applicable regulatory requirements, including those related to consumer protection, data protection, and anti-money laundering. To conclude, let me just take the opportunity, to highlight some of the activities that we have taken internally here at the Central Bank. The Central Bank, in collaboration with UNCDF and other partners, have made tremendous efforts in fostering inclusive fintech innovations and developing sandbox programs. We had the Sierra Leone FinTech Challenge as an initiative by the Bank of Sierra Leone in partnership with the UNCDF. The major objective of the challenge is to encourage and catalyze the development of fintech solutions that are useful and highly relevant to the people and businesses in Sierra Leone. These innovations have the potential to introduce game-changing ingredients for expanding quality of access and usage of financial services in Sierra Leone, where over 80% of the population remain unbanked, especially those living in rural areas, mostly women, young people, smallholder farmers, and marginalized population groups. During the first challenge in 2017, 2 winners entered the sandbox. The second challenge, which is ongoing, commenced in 2019 with 2 winners already identified to pilot innovative solutions around domestic resource mobilization. They are also expected to enter the box. The Bank of Sierra Leone Regulatory Sandbox has created a tailored regulatory environment for live testing of innovative financial products, services, and solutions subject to specific requirements. It is intended to enable innovative fintech products, services, and solutions in Sierra Leone to be deployed and tested in a live environment prior to launch into the marketplace. It is intended to facilitate the Bank of Sierra Leone's understanding of emerging technologies and support evidence-based approaches to regulation that advance the goals of financial inclusion, financial stability, integrity, and consumer protection. Currently, there are 3 participants in the regulatory sandbox with 4 products. One of the most striking products in the sandbox is a mobile-based financial literacy and entrepreneurship education. Entrepreneurship SMEs that complete the entrepreneurship and financial literacy training are linked to a financial institution to access a credit product. The distinguished participants, I want to end this the closing remarks by thanking you all for your attention and for inviting me to share our views on this very important topic. Thank you very much.
Thank you very much, Deputy Governor Sheikh Cissé. I don't think there's anything that I can add to this closing work except for thanking you again and thanking all the panelists, the Central Bank of Gambia, the World Bank, the Africa Resource Center, or the Africa Cybersecurity Resource Center. Thank you to all of you for your support and being here with us on this panel, and to the unsung heroes of UNCDF in Asia, Europe, West Africa. You all know who I'm talking about. Thank you for all your support and making this happen. And of course, thank you to the Singapore FinTech Festival for the awesome platform that was given to UNCDF and the West Africa ecosystem to join into the conversation. Thank you very much.
Thank you.
Thank you, everyone.